Hi, I'm Christine Short, Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we give a halftime report for second quarter earnings season. What a difference a week makes. As peak earnings season began last week, S&P 500 growth expectations for the second quarter had fallen to 6%, the lowest estimate for the season, on the back of downward revisions from Bank of America. As the peak season got into full swing and a number of big banks reported impressive beats on the top and bottom line, the growth rate incrementally began to tick up. Currently, estimates stand at 8.1% with 204 companies reporting. This is inching closer to the 9 to 10% we called for at the beginning of the season. Earnings per share stand at $29.11, an all-time record for the index, topping the previous record of $28.46 set during the fourth quarter of 2013. Strength among sectors has not changed in the past week, as telecommunication services, materials, and energy continue to lead the charge. Meanwhile, financials, the only sector that was expecting negative growth at the beginning of the season, has improved to 0.9% due to better than expected results from the big banks. In fact, not only have 73% of companies in the sector beaten expectations, they have done so by a large margin of 13%, the greatest of any sector. Overall, beat rates on both the top and bottom line are faring well, historically speaking. Of the 204 companies that have reported at this point, 67% have beat earnings estimates versus the historical average of 64%. This is with a surprise ratio of 5.8%. On the sales front, 64% of companies have beat estimates versus 61% historically, with a surprise ratio of 0.6%. If the remaining companies continue to beat by 0.6 percentage points, revenue growth could come in closer to 5% for the first time since the second quarter of 2012. Revenue growth estimates for the second quarter remain robust at 3.9%, in line with the result from the first quarter, but still below the 15-year average of 6%. Analysts expect the healthcare and consumer discretionary sectors to lead top-line growth, while they expect the telecommunications services sector to be the biggest laggard. Next week will mark the third week of peak earnings season, with 157 companies scheduled to report. The main focus will be on utilities sector, which have yet to report, and by the end of the week, over 75% of the index will have reported. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.